Welcome to the WION podcast, where we explore fascinating stories and ideas from various fields. In this episode, we explore how artificial intelligence could reshape Europe's finance sector, and in doing so, put an estimated 200,000 jobs at risk as banks transform by 2030. That warning is already taking shape inside Europe's biggest banks. European banks are preparing for large-scale job cuts as artificial intelligence becomes a core part of their operations. According to a new analysis by Morgan Stanley, reported by the Financial Times, more than 200,000 banking jobs in Europe could be lost by 2030. This is around 10% of the workforce across 35 major European banks. The report says banks are using AI to improve efficiency and reduce costs, while also closing physical branches as more customers move to digital banking. As per the Morgan Stanley analysis, job losses are likely to be highest in back-office functions, including risk management, compliance, and internal operations. These areas rely heavily on data processing, document checks, and reporting, tasks that AI systems can complete faster and at a lower cost. According to the report, banks expect efficiency gains of up to 30% by using AI-driven tools for tasks such as reviewing spreadsheets, monitoring transactions, and managing regulatory requirements. Some European banks have already announced workforce reductions. Dutch lender ABN AMRO has said it plans to cut around 20% of its staff by 2028 as part of its digital transformation strategy. In France, Société Générale's chief executive has stated that no part of the business is exempt from change as technology reshapes banking operations. The trend is not limited to Europe. In the United States, Goldman Sachs warned employees in October about job cuts and a hiring freeze until the end of 2025. The move is part of its AI-led restructuring plan known as OneGS 3.0. which focuses on automating processes such as client onboarding and regulatory reporting. While banks are pushing ahead with automation, some industry leaders have urged caution. A senior JP Morgan Chase executive told the Financial Times that reducing junior roles too quickly could weaken the industry in the long term. The concern is that young bankers may miss out on learning core skills if AI takes over too many entry-level tasks. Experts believe that banks will need to balance cost savings with proper training to ensure future employees understand the basics of banking, regulation, and risk management. Thanks for tuning into this incredible story. If this episode resonated with you, don't forget to hit the like and subscribe button for more captivating stories to come.